8 signs a property is a good investment for rental income. Whether you're a first-time investor, a seasoned landlord, or someone exploring real estate to diversify your portfolio, investing in a rental property can be a powerful way to generate passive income and build long-term wealth. However, not every property is a winner. Choosing the right one requires careful evaluation to ensure steady cash flow and appreciation. Some investors thrive by selecting properties with strong rental potential, while others struggle with vacancies, high maintenance, or poor returns due to hasty decisions. The difference lies in recognizing the signs that a property is a good investment for rental income, empowering you to make informed choices that align with your financial goals. In this article, we're exploring 8 signs that a property is a good investment for rental income, informed by insights from reputable sources like the Journal of Real Estate Research, the National Association of Realtors, NAR, and real estate experts such as those at the Urban Institute. These signs aren't just hunches, they're evidence-based indicators rooted in market analysis and investment principles to guide your decision-making. By the end, you'll know how to spot a promising rental property and take confident steps toward building your real estate portfolio. Stay with us until the end, because you might be closer to finding a great investment than you think, or discover practical ways to evaluate properties effectively. Let's dive in and uncover the signs that a property is primed for rental income success. Sign 1. The area has high rental demand and low vacancy rates. One of the clearest signs a property is a good investment for rental income is high rental demand paired with low vacancy rates in the area, indicating tenants are eager to rent and properties rarely sit empty. The NAR, 2023, reports that markets with vacancy rates below 5% generate 15% higher rental yields, as consistent demand ensures steady cash flow. High demand often stems from population growth, student populations, or urban migration, per the Urban Institute. Consider 2 investors, Maya and Liam, both 35. Maya buys a duplex in a college town with a 3% vacancy rate, renting both units within a week at $1,500 each, yielding $36,000 annually. Liam invests in a rural area with a 10% vacancy rate, struggling to find tenants, losing $6,000 yearly on an empty unit. Maya's choice shows she's targeting a high-demand market, while Liam's high-vacancy area signals a riskier investment. You can assess demand. Check vacancy rates on Zillow or HUD's housing data for your target area. Aim for below 5%. Contact local property managers to confirm rental demand. If you're in a hot market, prioritize properties near demand drivers like universities. If you're unsure, research one area's vacancy rate this week. Reflect. Does the area have strong rental demand or frequent vacancies? High demand and low vacancies are a key sign a property is a good rental investment. Sign 2. Property prices are reasonable compared to rental yields. Property prices that are reasonable compared to rental yields, offering a strong return relative to the purchase cost, are a strong sign a property is a good investment for rental income. The Journal of Real Estate Research, 2022, suggests a gross rental yield, annual rent divided by purchase price, of 6 to 8% indicates a solid investment. For example, a $200,000 property renting for $1,500 monthly yields 9%, outperforming markets with lower ratios. Picture 2 landlords, Sarah and Tom, both 40. Sarah buys a $250,000 condo renting for $2,000 monthly, 9.6% yield, generating $24,000 annually with positive cash flow. Tom purchases a $400,000 house renting for $2,000, 6% yield, barely covering costs. Sarah's high-yield property shows she's investing wisely, while Tom's lower yield suggests he needs a better price-to-rent ratio. You can evaluate yields. Use Redfin or Realtor.com to find property prices and average rents in your area. Calculate the yield for one property, e.g., $12,000 rent divided by $200,000 price equals 6%. Aim for 6% plus yields, per NAR benchmarks. If you're in a high-yield market, target similar properties. If yields are low, analyze one property's ratio this week. Reflect. Does the property offer strong rental yields, or is the price too high? Reasonable prices for yields are a critical sign a property is a good rental investment. If you're finding these insights valuable, please comment number 2 below to let me know you're here. Your engagement helps us create more content to fuel your real estate success. Let's keep going. Sign 3. The neighborhood is experiencing economic growth. A neighborhood experiencing economic growth, marked by new businesses, infrastructure, or population increases, is a clear sign a property is a good investment for rental income. The Urban Institute, 2023, found that areas with 3% plus annual job or population growth see 20% higher rent increases over 5 years, boosting cash flow and property value. Growth signals long-term tenant demand and appreciation potential. Imagine two investors, Alex and Emma, both 37. Alex buys a townhouse in a city with new tech hubs and 4% job growth, renting it for $2,500 monthly, with rents rising 5% yearly. Emma invests in a stagnant town with 0.5% growth, renting for $1,800 with flat rents. Alex's growing area shows he's poised for success, while Emma's stagnant market signals a weaker investment. You can spot growth. Research local economic indicators on BLS.gov or city websites. Look for job growth, new employers, or transit projects. Visit the neighborhood to observe construction or retail activity. If you're in a booming area, prioritize multifamily units. If unsure, investigate one area's growth metrics this week. Reflect, is the neighborhood thriving or stagnant? Economic growth is a key sign a property is a good rental investment. Sign 4. The property is in good condition with minimal repair needs. A property in good condition with minimal repair needs, requiring little to no immediate maintenance or upgrades, is a powerful sign it's a good investment for rental income. The NAR, 2022, notes that properties needing less than 5% of their value in repairs yield 10% higher cash flow in the first year, as investors avoid costly fixes that erode profits. Well-maintained homes attract tenants faster and reduce vacancy periods. Consider two buyers, Rachel and Mike, both 33. Rachel purchases a move-in-ready condo for $200,000, spending $2,000 on minor updates and renting it immediately for $1,800 monthly. Mike buys a fixer-upper for $180,000, spending $30,000 on repairs, delaying rentals by 3 months and losing $5,400. Rachel's low-maintenance property shows she's ready for income, while Mike's repair-heavy choice signals a riskier start. You can prioritize condition. Hire a home inspector to assess a property's systems, roof, HVAC, plumbing, before buying. Budget 1 to 2% of value for initial fixes. Focus on properties built or renovated within 15 years. If you target good condition homes, confirm tenant-ready features like modern appliances. If considering fixer-uppers, get one inspection quote this week. Reflect, is the property ready to rent or a repair burden? Good condition is a critical sign a property is a good rental investment. Sign 5. Local amenities attract reliable tenants. Local amenities that attract reliable tenants, parks, schools, grocery stores, or transit hubs, are a strong sign a property is a good investment for rental income. The Journal of Real Estate Research, 2021, found that properties within 1 mile of quality amenities have 12% lower vacancy rates and 15% higher rents, as desirable locations draw stable, long-term tenants like families or professionals. Picture two landlords, Chloe and Ryan, both 39. Chloe's rental is near a top-rated school and subway station, attracting a family paying $2,200 monthly on a 2-year lease. Ryan's property, far from amenities, struggles to find tenants, renting for $1,600 with frequent turnover. Chloe's amenity-rich location shows she's set for success, while Ryan's isolated property signals a weaker investment. You can target amenities. Use walkscore.com to check a property's proximity to schools, shops, or transit. Aim for a score above 70. Visit the area to confirm tenant-friendly features like coffee shops or gyms. If you're in an amenity-rich area, market these in listings. If amenities are sparse, evaluate one property's walk score this week. Reflect, does the area draw reliable tenants or feel remote? Strong amenities are a key sign a property is a good rental investment. If you're finding this valuable, please comment number 5 below to let me know you're here. Your support helps us deliver more content to enhance your investment strategy. Let's continue. Sign 6. The area has strong job opportunities nearby. An area with strong job opportunities nearby, major employers, growing industries, or low unemployment, signals a property is a good investment for rental income. The Bureau of Labor Statistics, 2023, shows that areas with unemployment below 4% and job growth above 2% annually support 10% higher rents and 8% lower vacancies, as employed tenants ensure consistent payments and demand. Imagine two investors, Oliver and Mia, both 42. Oliver buys a rental near a new Amazon hub with 3% job growth, leasing to professionals for $2,000 monthly with no vacancies. Mia's property is in an area with 6% unemployment and factory closures, renting sporadically for $1,400. Oliver's job-rich location shows he's positioned for income, while Mia's weak job market signals a riskier investment. You can evaluate job markets. Check BLS.gov or local economic reports for unemployment and job growth. Target areas below 4% unemployment. Contact chambers of commerce for employer data. If you're in a strong job market, focus on rentals for professionals. If jobs are scarce, research one area's employment trends this week. Reflect. Does the area offer robust jobs, or struggle economically? Strong job opportunities are a critical sign a property is a good rental investment. Sign 7. Zoning and regulations support rental properties. Zoning and regulations that support rental properties, no restrictive laws, HOA bans, or short-term rental limits, are a clear sign a property is a good investment for rental income. The Urban Institute, 2022, notes that investor-friendly zoning increases rental returns by 12%, as flexible rules allow consistent leasing and tenant types. Restrictive areas can limit income or add compliance costs. Consider two investors, Ethan and Lily, both 36. Ethan buys in a city with no rental caps, leasing a duplex for $3,000 monthly, including Airbnb income. Lily's property faces HOA rules banning rentals under 12 months, forcing her to sell at a loss. Ethan's flexible zoning shows he's set for success, while Lily's restrictions signal a poor investment choice. You can check regulations. Review city zoning codes on municipal websites or call the planning department to confirm rental rules. Ensure no bans on long or short-term leases. Check HOA bylaws for restrictions. If zoning is supportive, explore multi-unit properties. If regulations are unclear, contact one city office this week. Reflect. Does the area welcome rentals or impose barriers? Supportive zoning is a key sign a property is a good rental investment. Sign 8. The property offers potential for value-add improvements. A property offering potential for value-add improvements, upgrades like modern kitchens, extra bedrooms, or energy-efficient features that boost rent or value, is a powerful sign it's a good investment for rental income. The NAR, 2023, found that value-add properties increase rents by 15 to 20% and appreciation by 10%, as upgrades attract higher-paying tenants and enhance marketability. Picture two buyers, Noah and Ava, both 38. Noah purchases a $220,000 home, spending $10,000 on a new bathroom, raising rent from $1,600 to $2,000 monthly in value by $30,000. Ava buys a fully updated $240,000 home with no upgrade potential, renting for $1,700 with minimal growth. Noah's value-add opportunity shows he's maximizing returns, while Ava's static property signals a less dynamic investment. You can identify value-add potential. Tour properties with a contractor to spot upgrade opportunities, e.g., $5,000 for flooring to add $200 monthly rent. Budget 5% of purchase price for improvements. If you target value-add properties, prioritize cosmetic fixes. If upgrades seem costly, evaluate one property's potential this week, like adding a bedroom. Reflect. Can the property be improved for higher rent, or is it maxed out? Value-add potential is a critical sign a property is a good rental investment. If you found this inspiring, comment number 8 below to stay connected. Your engagement fuels our mission to empower your real estate journey. Final thoughts. Now that you've explored these 8 signs, reflect on your approach to rental property investing. Is the area in high demand with low vacancies, and does the price offer strong yields? Is the neighborhood growing, the property in good shape, and amenities appealing? Are jobs plentiful, regulations supportive, and value-add opportunities present? These signs aren't just checkboxes, they're proof a property is primed for rental income success. You can find a great investment. This week, research one area's vacancy rate, calculate a property's rental yield, and check local job growth. Inspect one property's condition, confirm amenities, and review zoning rules. Explore one value-add idea with a contractor. Use tools like Zillow, NAR, or BLS.gov to stay data-driven. If any signs are missing, focus on one, visit a growing neighborhood, or analyze a yield. Your real estate success is within reach. The choices you make now build a future of steady income and wealth. Investing in rental properties can transform your financial outlook. Celebrate recognizing these signs and take one step today, because how you invest now shapes a tomorrow filled with prosperity and opportunity.